Or really, is this your first time with blockchain? How many people here are first timers? Yeah? Okay, a lot of people. How many people would say that they're knowledgeable about blockchain? Okay, that's good. And how many people would say that they're super experienced, super knowledgeable, very little learned? Yeah? Okay, woo, we have one! Woo! All right, that's great. Oh, two!
So you know why I raised my hand?
Please.
Okay.
Yeah.
So you know the chicken and the pig?
The chicken and the egg?
Chicken and the pig, right?
No.
The pig.
The pig. No.
Are you a chicken or a pig? Right? If you're a chicken, you're not committed. If you're a pig, committed. I'm the pig.
Okay.
I put my money on the line.
Wonderful. Okay, so we have both a chicken and a pig. This is great. Oh, we'll soon have a whole farm here, everyone. So my name is Toni Casserly. I co-founded one of the largest media publications in the blockchain industry called Cointelegraph. I've been in this space since about 2011, which is absolutely nuts. It's crazy to me. I'm going to move this chair a little bit. It's crazy to me that I'm here right now and that I'm talking about this because I remember when blockchain industry was pretty much me and like 5 cryptographers and nerds sitting in a room alone. So it's crazy to me that this has taken off in such a way, and it is even more meaningful for me to see that the impact that I believe this technology would have when I was still in college. I was, barely 20 years old. To see that the impact that I understood blockchain would have when I was so young, but the size and the scope of that is going to be beyond what I could have ever imagined. I would have never thought back then, or even 3 years ago, that we would be where we are today. So I am excited to be here to share with you guys. My company is Culture. It's actually this necklace that I'm wearing, and that little logo at the bottom. And what Culture does is it uses blockchain to provide universal access to human rights and a system of contract law for people across the planet. And it also helps to transform the popular model of what we have seen to be government or governance. So to talk about how we might think about solutions for governance, maybe let's first talk about the problem, right? So, does anyone know where I put this up here? Up here? There? Yeah? Okay, I'll just stand here. So, does decentralization actually work, right? One of the original promises of blockchain is that we're essentially creating this world where we're eliminating middlemen and we're shifting the centralization of power, and all of the resources in the world will be distributed into the hands of every person on the earth, and there will be no central power. But is that true? No, I mean, not now, at least. Does it actually work is a core question. A lot of times when we speak about philosophy, people tend to idealize language more than we actually implement what we speak about in practice. And what we've been seeing in blockchain is that human nature seems to be more ingrained in us than any kind of technology in terms of the kind of repercussions that an innovation will have for the way human life interacts with itself. So let's start by talking about Bitcoin, right? Bitcoin is like the OG, the original gangster of the blockchain industry. And Bitcoin is essentially not the internet, but it's the internet of money. So what Bitcoin actually created and what Bitcoin actually empowered was the ability for anyone in the world to take these tools into their own hands and create their own form of money or their own form of value. Now, Bitcoin had a bit of a split. I don't know how many of you guys know about this. Does anyone know about what happened with Bitcoin and Bitcoin Cash? A few people. Do some people not know? Some people don't know? Okay. So what essentially happened is Bitcoin had huge social failure. And that massive social failure, the technology can be perfect. The cryptographic hashes, like all the SHAs, everything can be perfect on the back end. But if you're not factoring in how people are going to use your technology, you might run into some problems. So Bitcoin essentially had a social fracture, where there was a massive debate about how big the block size was going to be. And this essentially was saying how many transactions will Bitcoin be able to process per minute based on the amount of money it costs to send Bitcoin from person to person. And on one side of the equation, you had this group of scientists, And on the other side of the equation, you had a group of, Bitcoin promoters who said, Bitcoin's essentially better, faster, cheaper. You're going to be able to send payments to anyone in the world for almost no money. That was their promise. But science wasn't exactly in alignment with the promise that a lot of the people who believed in Bitcoin in the early days had told their followers to look up to. So because there was a social fracture, or rather a political fracture, Bitcoin split into two versions of itself. You essentially have Bitcoin and you have Bitcoin Cash. And Bitcoin Cash is, right now they're currently at cheaper transactions, and Bitcoin uses the Lightning Network to process transactions faster. So it's really the variant between scientific rigor and the idea of entrepreneurial enthusiasm. That's the polite way to look at it. It was a very politically terse situation. People were really mean to each other, and it was one of the most demoralizing public arguments I've ever seen happen online in my entire life, right? There are some reasons why that happened, and this is all about the governance. Does the governance of decentralization actually work? So there are some reasons why this happened, and why it was a social fracture. Reason one is because we had incentives without interdependency. Bitcoin was built to imbue sovereign individuals around the world with the ability to own an economic system outside of what we perceive as the popular definition of currency or nations. But they didn't factor in something really important. We're all in this together. All of us. And we always will be. But because that wasn't factored in, people started doing things like seeking social validation for power in the network, because those are the incentives. You have more control in what happens in the Bitcoin process if you're able to receive, whether you're a core developer or whether you're someone who's a promoter of the technology. You have more influence if you have more social validation. That's exactly why we saw the social system fracture in Bitcoin. It's actually designed relatively similar to the way our current political system works. And the current political system is pretty polarized. So if you have a system where people are seeking social validation to gain power, it's not really a decentralized system. You're not really incentivizing the good of the commons. The second reason why is not only are people consolidating who they're looking up to as leaders, we also have data center consolidation. And there's actually an economic reason for this. I mean, it's cheaper if you own a bunch of servers and you put them all in one place, rather than saying, we're gonna go out there and put an ASIC miner in every single toaster in the world, right? You could do that. Not everyone likes toast. I know. I don't know those people, but I've heard that they exist. I've heard that they exist. They're apparently out there. But instead of putting an ASIC miner into everyone's computer or using everyone's computer, what happened naturally with data centers is people just started buying them and they wanted to own them. And that's certainly not a decentralized process when we have basically like 10 companies that own the entire mining process for the Bitcoin network, and about 50% or more of them are in China, with the exception of really Bitfury. So that's definitely not decentralized governance. And the third incentive is hodling and hoarding. The actual incentive to use Bitcoin is really low. There's a bigger incentive for you to say, I'm literally never going to spend this money. I'm going to keep all of this money like gold, and I'm just going to hold it until the price goes up, or I'm going to hoard it. The incentives in the Bitcoin network are not to share. They're to get more for yourself. That's by design, right? And there's a political reason behind that, which is really interesting. But in terms of the way this works for human behavior on a broad scale, we're not actually incentivizing what makes us human, right? Now, would I suggest that people buy Bitcoin? And would I suggest that I personally think that Bitcoin is the best protocol that exists? Yes, I would. I would say Bitcoin is still the strongest bet in the ecosystem today, even though the incentives don't really work. Because what does this create? An echo chamber. An echo chamber. When you incentivize social validation, resource consolidation, and the absence of human reciprocity, what ends up happening in Bitcoin is what ended up happening in our current political construct. And that's people just get lost down one track, because their ability to have that kind of ownership isn't really granted to them unless they got into the system really early. If they didn't, they're still looking up to people who did, trying to be like them. It doesn't actually incentivize human equality. But it is the most secure blockchain that exists, hands down. It's not even comparable. In fact, what's interesting about the Bitcoin blockchain is that the fracture in the fork didn't happen because of a security flaw. It happened because of a political flaw. So the social incentives are wrong, but the security incentives are right. Now, granted, I don't think Satoshi Nakamoto, as this kind of really underground cryptographer, really thought about the social incentives when he was designing Bitcoin. What Satoshi Nakamoto was thinking about are the political implications of the digital currency which will prevail. Was Bitcoin successful in its design and its intention? Absolutely. Is the governance model the right model? I don't think so. I don't think so. So now let's talk about Ethereum, right? So you have Ethereum and you have Ethereum Classic. Now, does anyone know about the Ethereum Classic split? Okay, hopefully you guys know. So Ethereum and Ethereum Classic exist because of the DAO. So what happened early on in the Ethereum ecosystem, there was a company called the DAO. It was meant to be, all of the distributed autonomous organizations are going to be put on one blockchain, and every person in the world can invest in the DAO, and then we can use the DAO to decide collectively what groups and things that people want to invest in from our platform for organizations. Sounds really cool. And a lot of the founders of Ethereum thought so too. And so they started promoting it publicly or privately to their friends, which caused this to be the first large, super successful ICO. The DAO raised $150 million. And that sounds really cool until someone goes on Reddit and exposes a security flaw. Oops. $50 million was stolen the next day, pretty much, from the DAO. And what happened is Vitalik looked at the situation and said, okay, well, essentially the SEC can hold me accountable, and essentially I can put the well-being of the entire project at risk, or we can fork it. And we can return the $50 million to all of the investors who lost their money. So that's what they did. And now you have Ethereum and Ethereum Classic. Now the interesting thing is that this didn't happen because of a social fracture, right? In fact, Ethereum and Ethereum Classic work pretty well together. Not many people use Ethereum Classic, right? But it's pretty much, they have a lot of harmony between these two protocols and systems. Rather than saying this is a huge political split and a really nasty breakup, they still work pretty well together. It was a security failure that caused this to happen. Now, the incentives aren't perfect though, right? Because who else does Ethereum hold hands with, right? Ethereum has a lot of consolidated ownership. In fact, Casper, essentially a new project that's launching on Ethereum, was basically created to prevent civil attacks from some of the larger holders of Ethereum. And this consolidated ownership and the leadership of Ethereum has the potential to put the entire movement of decentralization at risk by doing things like partnering with governments, some of which, not all, I'm not trying to say be hateful or anything, some of which don't have the best interests of human life at heart, right? There are some governments who want to use there's some dictators, let me rephrase that, there are some dictators who want to use the Ethereum blockchain to essentially consolidate all of the entrepreneurial currency in their ecosystem. Why do you think there are dictators saying that we want to create the crypto, whatever their national currency is? And it's because they're thinking about allowing people, they're essentially wanting to own the money supply and eliminate all of the banks. And in owning the money supply and eliminating all of the banks, they're creating a situation where they say, essentially, any entrepreneur who wants to launch an ICO from within the bounds of our dictatorship will have to do that in a way that allows me, to receive wealth from the wealth that they create, and I'll still consolidate the entire ecosystem. But now the money supply isn't owned by all of these people. Now the money supply is basically just owned by me, right? And these are things that there are actually governments that have been talking about using the Ethereum blockchain to do this, like the Petro coin from Venezuela. right? So there are some serious risks of consolidated ownership that Ethereum allows from having this free and open marketplace that could actually put the principles of decentralization at risk. Is Ethereum decentralized? That's a really good question. We still haven't even seen proof of stake yet. So the other challenge with this, other than centralized institutions coming in and trying to exploit an ecosystem to cause harm to broad populations of citizens, there's also another challenge with Ethereum, which Bitcoin didn't have, because Bitcoin didn't allow a bunch of people to come into the ecosystem and launch a bunch of altcoins. Early days in Bitcoin, saying that you were looking into an alternative currency was like saying that you had leprosy. It was, no one in Bitcoin wanted anything to do with alternative currencies. And Ethereum's totally different. And there's some really positive side effects to this. Just like from this last slide, there's some really positive side effects to this, working with some of these broader organizations. Potential solutions for people that are disempowered from their human rights, right? Like, there are really two sides to every coin. So it's empowered a lot of people to launch some really awesome things and some really awesome ICOs. 46% of which, I think that number is probably now closer to something like 67% of ICOs have failed. And those ICOs, the ones that are sitting up there, they're literally just outright scams of people that launched a token and basically just wrote a few lines of smart contract code and stole money from their investors. So in not having a system of accreditation or not having a system of self-regulation, if we don't regulate ourselves and we are not responsible for ourselves and our ecosystem, there could be people who try to step in and do that for us. And they may not always have your best interest at heart, right? The incentives might not be set up that way. So there are some big flaws to even the governance systems in Ethereum, right? Now, we have all of this remarkable innovation, billions and billions of dollars, potentially trillions of dollars, flowing into this ecosystem. But we still haven't really figured out how to be basically accountable and kind to other forms of human life. We still haven't figured out some really basic things like collective responsibility and integrity. So, does decentralization actually work? Maybe not, but friendship is a good start, right? What are all of these ecosystems actually missing? It's what's human about us, what connects us all together, right? Darwin is often, he's like my favorite misquote of all time, because Darwin's often credited as saying survival of the fittest. But did Darwin actually say that? Ever? There were some quotes that could lead people to believe that in The Descent of Man. But if you look in that same book, 2 chapters earlier, you'll actually see that Darwin says something far more powerful, which is that species with the highest capacity for sympathy, qualities we now identify as altruism, compassion, empathy, that these will be the most likely to survive during periods of hardship. Because the incentives in these ecosystems are not designed so that we are all giving back to each other and watching out for taking care of each other as a human race, I'm not sure that the incentives are right in terms of what we actually need to govern ourselves and each other in collectives effectively as humans. Once you reach a level of self-sufficiency for yourself, you can take care of your family and your local community. But what if all of us had enough resources at our disposal, enough access to take care of the world? Well, that is why we build culture. Culture is a project that's created to try and help solve some of the incentives that exist in the current blockchain landscape and ecosystem. Now, how do we do this? And how do we think about incentives? Frankly, I'm not under the impression that I know anything. I don't think anyone is. This industry is a massive experiment. It is a massive research project that has very swiftly become one of the most expensive multi-billion-dollar toys on the entire planet. But the one thing that's true about pretty much everyone in this ecosystem, I think the one thing that's true about all of us just as a collective human life is that no one person has all of the answers. And I think we're all just trying to figure it out. So what culture incentivizes are ecosystems of ownership, the infinite economy, and universal access as a universal right. Because with universal access to opportunity, the universal ability to own systems of contract law outside of what might be perceived as a popular nation, the more access to opportunity and rights that we give people, the better off we're all going to be collectively. Reciprocity is so important, because none of this can work if we're not all looking out for each other. Yes, the system does part of that, right? But it's up to us. It's up to us to really carry the vision and the movement of decentralization forward. So this is my favorite meme in the world. And it says, I have a cookie. Ah, nice. I have a multi-million cake factory. I also discovered this, and I have a tropical island, and all of these things. And this other person says, do you have a cookie? And they say, no. And then the person who only has a cookie breaks that cookie in half and gives it to someone else. Reciprocity is everything. So people are currently incentivized to behave in this way, right? Regardless of systems design, this is literally just human behavior. Hello, I have a thing. I'd like a thing. You have a thing? Yeah, I have a thing. I might not even need this thing. Will you give me the thing? Well, will you give me a thing for the thing? Well, I don't have any things. Okay, well then you can't have my thing. But what if we all had access to things? What if we all had access to things? What if we just had the ability to give someone something who needed something? Because we knew that we would have the ability to generate more value. This is the way our systems of data work right now. We're actually already living in the infinite economy. It just hasn't been quantified in a way that's granted ubiquitous access to everyone yet. Our data, not only our data that we distribute and create to Facebook, the biological data that we have, the quality of the air, all of this is information that can be translated into meaning that if we own the access to our identity, we can own the access to our data. And if we own the access to our data, then we're essentially living in a continuously regenerative economy. The way that I describe blockchain to most people is that data is a non-scarce resource, and blockchain is a tool built on scarce economic principles. So if you have a finite amount of tokens and an infinite amount of data, what happens? It's really simple. It's really simpler than most people think. So to have things, you need access to things. So we believe that access should be free. So the foundation of what we're working on at Culture is called Web of Trust. It is a standard for universal citizenship and the ability for people to own access to legal contract rights outside of the bounds of one potential jurisdiction. So if you're a refugee, or if you're a person who doesn't have your identity, and you don't have a nation that can say, oh, I see your social security number is la 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 la, then how do you exist? You should still have the right to exist. And who verifies that? It's your community. So if you're a refugee or you're living in an undocumented way, you can say, I have this person who my mom can verify me, and she can create a claim that I'm a good daughter because I always take care of her, I always take her to church or walk her down the street or these things. This other person can verify my identity, and they can say that I have the skills as a carpenter because we've been building houses together for 6 months, and so on and so forth. Web of Trust is a standard for people to own sovereignly both their identity and their contracts in a way that uses community networks to verify your ownership. So we're literally putting power into the hands of the people in a way that's free. It doesn't actually have an economic incentive, which we think is really important. You should never in a million years have to pay to own your right to exist. You should never have to pay in a million years to own your rights at all, right? And on top of this, so this system is essentially as a foundation, political liberation through ubiquitous access to legal rights in contract law. And then on top of that, it is the ability for anyone in the world to create and own new forms of community. So it's the idea that everyone can simply play together nicely because you literally depend on other people to use the system. Your identity on the system is not just a function of your registration. Just like, Bitcoin right now is a function of, it's a binary system. You have a Bitcoin, you log in a system, you own that Bitcoin, there are no intermediaries, right? It's an immutable ledger. But in this system, what's actually incentivized is for everyone to give back to each other and for everyone to work together. So what Web of Trust does, Web of Trust is the dark purple dot that's running through all of these different areas. So Web of Trust is an open source standard that is free and will always be free for everyone. Now, with Web of Trust, you can also have 100 other identities. So you can use Web of Trust, and then you can register your national passport, and then you can use your Facebook identity, and your identity through Jumio, and your identity through Civic, and you can pick which identity you want to use to interact with other applications on the system. So let's say you don't want Facebook to know that you're browsing either these different things or you're using these different applications. You can use a different identity to interface with the world through the culture interface. And culture not only allows you to own all of your identities, different identities, but it also allows you to essentially participate in an ecosystem of applications that enables what I call the infinite economy. Because through all of these different applications, if they're built on the blockchain, anytime you're using the system, if you're generating value from the system, you're actually going to receive value, and you're going to receive tokens from the system that allow you to be self-sufficient for essentially just giving your attention to different servers, different applications, and hopefully using that attention to generate something beyond the value of information, which is meaning, right? The generation of human meaning. So once you're self-sufficient from owning your identity and interacting with all of these different applications in meaningful ways, participating in a diverse ecosystem of economies, you are then able to create community. So it's the idea that there's your whole ecosystem of identity and all of your legal rights and your standards. And then once you're participating and playing through all of those different economies, you have the ability to use the culture system to create your own community and to quantify that community in bounds. Bounds that could just be, a standard or a grouping, and bounds that could be a token. So it's really simple, right? All of these economies that exist now, they're still so scarce because no one's working together. Bitcoin and Ethereum have looked at each other as though they're competitors. EOS and Ethereum have looked at each other as though they're competitors. They're not. They're not. And the only way, because everyone in this room, if you're really smart, you're not just gonna have Bitcoin. And you're not just gonna have Ethereum. You're gonna participate in a diverse myriad of ecosystems. Because that's the difference between information, value, to meaning and wealth. We generate real wealth from interacting and participating with ecosystems diversely. So if everyone played nicely together, which is what we enable through the foundation of our incentive layer, maybe everyone could just have the things they wanted, right? By just doing the things that they love to do. What if people could stop fighting and work together? They can. It's really simple. Just be nice to each other. We think that would be very neat. And we hope that you do too. So come play with us because the future of government is culture. Thank you. So I'm happy to answer any questions, and then I wanted to see if I could write on one of the, can I edit the slides from here? Wonder if I can. Ooh, nope, apparently not. I wanted to put my, maybe I could just open a note. I wanted to put my email on something so if people wanted to contact me, they'd have a way to.
We will share it.
Okay, great.
Share it with the attendees.
Okay, great, awesome, awesome.
We can just, yeah.
So
Yeah.
Stripe recently put out that they're not going to support Bitcoin as a payment mechanism. And the reasons they put out specifically was the fact that the latency for a transaction is increasing too much.
Yeah.
And look at Bitcoin becoming more of an asset class rather than a transaction mechanism.
Yeah.
What are your views on that, and where do you see this head in terms of how are you solving this problem? I think it is a real problem. How are you solving it?
Yeah, so for me, it's actually about, for me, it's actually simpler than that. I don't have to think about solving the problem. I just work with people that are smarter than me, so we all solve it together. Because I don't think any person who's ever said, I'm solving this problem alone and it's only me and I'm the only person solving this problem, there's no great scientist in the world who, during that period of time, didn't have friends or contemporaries that they were sharing their minds with. So if you look at something like, on Bitcoin, whether or not Bitcoin is a property or an asset or a digital gold, this is also part of the other element to the block size debate, which is how are people going, how are like the SEC or how are the governments going to look at Bitcoin if you're able to process it this quickly? If you're able to process it more slowly, then we could change the way in which it's perceived from a tax perspective, and in changing the way it's perceived from a tax perspective, actually shift its both its use in the world and then the relationship that it has to traditional governments and nation states. So it's a really good question. The ecosystem is evolving every single day. So I'm not the person who's going to say this is what Bitcoin is in this certain environment. And actually what we're seeing is that different jurisdictions are taking different approaches to Bitcoin. So in terms of processing transactions rapidly, like CryptoKitties clogged the Ethereum blockchain, if you look at EOS has actually figured something really interesting out, which is delegated proof of stake. So if you look at the BitShares blockchain, BitShares is one of the first projects that Dan Larimer, who's the technologist behind EOS, created. He also created Steemit. So if you look at BitShares is actually processing more transactions than both the Bitcoin blockchain and the Ethereum blockchain combined. So, like I said, it's not just up to me, and different people will want to use different things for different reasons. I'm just enabling a play space for everyone to come together and not fight with each other anymore, because I just don't want to see any more violence. So yeah, it's really, then there will be blockchains after that, or applications that are built on blockchains that will help figure this out. This technology really still, if people forget, like still in its infancy. Right, but that's what I would look into if you're looking for something that can process transactions rapidly at a low cost with a higher speed and lower latency than any other blockchain, delegated proof of stake.
Few startups. For every Uber you see, there are probably 99 others who just couldn't overcome the catch-22. But in the blockchain world, we have this hypothesis that you can actually raise tokens, you get capitalized, and then you go about building the network by using tokens as a currency to attract incentives. Now the question is that, do we have any valid proof that you can bootstrap a network into existence by using tokens as a currency, or is it more likely that you're going to be attracting the type of people who would not stick around and actually use the network, but who would get the tokens and cash out and then they go?
It's all about incentives. So this works in a million different ways. And if you're just, oh gosh, I'll kind of describe ICOs like this. So I have this, because I've been in this ecosystem for so long, all my friends and all of these, I talked to like half the investors in Silicon Valley about Bitcoin before Ethereum even existed. Like when Vitalik was thinking about building Mastercoin, but instead didn't build Mastercoin and built Ethereum. And after things started taking off, I had like every investor that I'd ever spoken to, at least like once in my life at a bar or something, contact me and be like, ICOs. And I was like, all right, cool. And they were showing me these companies, and I was looking at them going, okay, so would you invest in this company if it didn't have a token? And they're like, well, no. And I'm like, do you think this business model is feasible? And they're like, well, no. And I'm like, do you like the team? And they're like, well, no. And I'm like, then why are you looking at investing in it just because it has a token? So if you're just using tokens for fundraising, there's a big difference, because what you're actually doing is, rather than selling like a currency or an actual token, you're essentially doing crowdfunding. What you're actually selling is equity, right? So it's a different model. So if you're just using a token to raise money to build your company, then you're not actually raising a token. What you're doing is you're open sourcing equity crowdfunding. And that's a different model. So if you want to do that, I mean, you can certainly do that, and then you can certainly have a payout to say, here's where our revenue is, or here's this or that. But if you want to do an actual token, you're going to need to have, a system of whether it's a security because you're backing your token with hard assets, or whether you're using, which I would encourage anyone who's interested in security tokens, that's going to be security tokens are what are going to make this ecosystem literally pop into infinity again. That's how we're going to recover from the bubble. I would encourage you guys to look into something called Polymath. It is, full disclosure, I do advise the company, but it's essentially a token network for securities tokens. Securities tokens are going to be, 2019 is going to be the year of securities tokens, if not this year, right? So I would encourage you to say, yeah, are you backing it with a hard asset, or is it actual utility? So someone like, if you're doing a messenger app, for example, like if you tokenize, right? And you say, well, every time someone sends a message, or anytime someone buys stickers or does whatever, they're actually getting utility from using the app, and so that's a token ecosystem. So there's a big difference between raising like a coin and then raising a token and doing an equity crowdfunding round. And if you want investors that are going to be invested in the long-term potential of your company, there's some things you can do, like for example, not releasing your tokens to investors instantly. Right? You can do the same things that you can do for companies where you're saying we're raising and you have this kind of a cliff, you have this kind of a vesting schedule. You can do the exact same thing for tokens. You just have more flexibility in the model. And if you want, you have more liquidity. A lot of the companies that I've worked with who have done tokens, they haven't even pushed their token out to the network yet. They might have used a smart contract to do a raise. So on the back end, using a smart contract, doing a raise, raising capital, and then figuring out what their token model is, and then coming back, launching that token, and then distributing investors who originally invested in what would be like the initial crowd sale, giving those investors shares in the token that's going to have liquidity. So it's really dynamic. You can do a lot of different things with tokens. Most people have no idea what they're doing, frankly. So most people that are raising this ecosystem aren't actually even raising with tokens or creating something of value. So I would just say, if you're going to do that model, be super thoughtful about what you're building and what is the actual long-term utility of the token. But it's definitely an option, and it's been really successful, obviously, for a lot of people. There are billions of dollars raised in ICOs this year. I wouldn't discourage anyone from doing it, but I would say that we'll probably see regulatory guidelines, at least from the United States, released this year. So if you're considering it, look to environments like Switzerland, who have actually released, the FINMA has actually released a guideline for what is a payment token, a security token, and a utility token. So I'd also encourage everyone to go check that out, know who you're playing with, because big players are going to come into this ecosystem and try to essentially provide some guidelines for people. So I would be thoughtful about that. Yeah. Thank you.
It's a big vision. It's great to see the beginnings of a purpose-driven brand.
Thank you.
And I believe in purpose-driven branding. That's it. Here's the question. From the sublime to the ridiculous.
Yeah.
There's tons of money to be made in the cannabis market.
Yeah. Yeah.
Not indulging in it, but, because that kind of knocks you out. But, there really is, it's an untapped market. There's billions of dollars waiting in the wings. Here's my question. How would, and I'm a neophyte with all this business, how would this work in the cannabis market, which has real payment and identity issues?
Crypto and cannabis are made for each other.
Yeah.
The amount of people, they really are. I don't know if you guys know this, but if you're in the cannabis business, I have friends who are in the cannabis business that will be like out somewhere, we'll just be like, they're like normal people with families and are super credible, and we're just out somewhere and they just get their bank account shut down. And they're like at a restaurant, they're like, why isn't my credit card working? I'm trying to buy a coffee. And then they call their bank, And the bank is like, oh, sorry, like basically we figured out that you're in the cannabis industry and we took the millions of dollars in your bank account and we're mailing it to your listed address as a cashier's check, basically. Like you no longer have access to a bank. This has happened to at least 15 people that I know. It's just simply ridiculous. I've even been to some of my friends' places who were in that business, and it's like, you're like, what? Like, I've never seen so much actual cash in my life, because they're literally saying, I am prohibited from having a bank account, because we don't have a unified jurisdictional perspective on the cannabis industry. It's legal here, but it might be illegal in another state, and so if you have money that you're making from that industry and you're using your credit card in a state where the business is not legal, it's a really big problem. So there are huge applications. I know a ton of people that are looking into this. You know what's strange is that I haven't actually seen something executed successfully. Yeah, there's really no one main, I've worked with a lot of those companies. There's really no one who's coming out to like take mass market share, which seems so strange, because it's just so much easier and it's so much simpler. But what I think will actually happen, what I hope will happen, is that there's a diverse economy of people that are actually contributing, that are actually creating different forms of currency in the ecosystem. So you're not just going to have one cannabis coin that's going to own the entire market. You're going to have many different people with many different currencies, because I think broadly speaking, I just think that is what is not only economically rational, but I just think that's what's healthy. I think it's healthy to have many different people participating in the ecosystem. So if you want me to kind of go into either the implications or the applications, it's basically you can't use a bank account. So if you're doing business in the cannabis industry, you could take your money, and whether you're looking at this as cannabis is a hard asset with this particular value, and this is the market value of this based on these series of sites that are essentially rating this particular strain as worth this much money per gram or per pound, and you're embedding that into a blockchain to do transactions in a way that you can create a stable coin in the medical marijuana industry. Obviously legally, I shouldn't have to say that, but I'm going to say it. Obviously legally, you could use digital currency to create a stable coin, or you could also do something that's a bit more free-flowing, where the value of the token automatically adjusts to the value of the strain as seen from these accredited sources on a public market or whatnot. So there's a lot of opportunity, and I haven't seen anyone really go for the full monopoly capture of it, and I think that's great. I think there should be a bunch of people that are creating these different ecosystems for different purposes, and we should, because enabling that kind of economic diversity, I think in the long term is going to work out better for everyone. Yeah. Yeah, of course. Yeah.
Yeah, thanks, Toni. Right.
Sure.